West Africa up to Ontario in Canada. We are going to hear from Ray Shorrocks. He is the executive chairman of Auteco Minerals. And I've got to say, this is a very exciting story. Ray, without further ado, over to you to tell the Auteco Minerals story.
Thank you, Kerry. Very much appreciated. And thank you to NWR for providing this virtual conference. Looking forward to it. It's always great. This first slide I have before you today is a great example of what's happening there today. Anyone that's been following the story would be aware that we put up this slide, a month ago, and it was nice and what would I consider to be barren of snow. It is now frozen. This picture is about 10 days old, but that's great for drilling. Frozen ground is fantastic for drilling. So what you can see, I don't know if you can see my pointer here, but this gives you a great indication of the infrastructure we have at site, the internal roads that are all paved. You can see up here, if you go up the road, you can see some old workings here. This is where the old head frame is, which I'll be talking quite a bit about. You'll hear that I'll talk about shaft 1, 3, and the Albany shaft, and that's what I will try and take you through. So visually, you can see that. To the left down here is the core shack. Here is a new 24-man winterized camp, and over here is our core shed. The rest is toilet blocks, generators, and the like. So these are the obligatory cautionary statements. I'll let you read those at your leisure. So here we are, this Pickle Crow project, which is based in Ontario, Canada, at a place called Pickle Crow. Pleased to announce that we increased our resource by 170,000 ounces to 1 million ounces at over 11 grams per tonne, maintaining that 10 grams plus goal and objective that we want to do here. This is a high-grade area province. We've got multiple new high-grade gold lodes which have been discovered outside this resource zone that I've been talking about. So look forward to showing you some more drill results in the coming quarters, the rest of this year and the first 2 quarters of next year. Well, what's really great about this particular project is all the mineralisation runs from surface and it's open in all directions. And we have, which I'll show you later on, a lot of very good walk-up targets. Results from ongoing drilling will be, and I'll take you through some of those. We should have something to you over the course of this quarter and next. And there's 2 rigs currently drilling on site. They're doing double shifts. And we announced in September that we increased our drilling program from 10,000 metres to 45,000 metres. 13,000 drilled to date, which is the summation of which is 58 holes. Really interesting. I want you to understand that the purchase of this asset came with it some great infrastructure, and I'll walk you through all of that, which is, it's really something to behold. And secondly, we have a granted mining license out to 2067, and for all of those that are listening, I probably won't be around then, but we do have a good balance sheet, which I'm sure you will all appreciate. For a junior, is a great balance sheet to progress on our drilling campaign and take these new assays into an increased resource in the the first half of next year. Now, I really bring these slides up first because an asset will always just remain an asset unless you have the team to exploit it. And what I have here that you have before you right now is, I believe I'm blessed with one of the best resources teams in the country. I'm sure that's up for debate, but I think it is terrific. For those that don't know, I'm the ex-founding chairman of Bellevue Gold, which Steve Parsons, who's a non-executive director on this board, is the managing director of Bellevue Gold, along with Mike Naylor, who sits on this board as a non-executive director, but he's an executive director in Bellevue. A great set of hands, terrific to have alongside and on our board. And Sam Brooks, who is the technical director on this board, but the chief geologist at Bellevue. And my chief geologist here is Marcus Harden, who I might add has had a bag of discoveries to his belt. most of which have gone to production. So this is a team which has got a significant track record to take exploration companies to development, a la Bellevue. Here, there's a couple of takeaways you can see from this particular slide. This is, a classic corporate summary sheet, but there are 3 takeaways. One is, when you consider our cash position out, takes our enterprise enterprise value in this company to a very unchallenging number. And with 1 million ounces at 11.3 grams per tonne, I think you'd all agree that our valuation is right down there when it comes to value for money. The second thing you should take away from this is that all of that board and management that you saw before have got skin in the game. All the shares have been paid for by themselves. They've not just taken early shares, but participated on market and alongside other investors in placements that we've undertaken. The third takeaway from this slide, I believe, is that for such a young company, and don't forget that we picked up this asset in late January this year, we now have a register, which is almost a quarter full of global institutional shareholders. You can see there 1832 occupies quite a bit, almost up to 9%, but we also have North American institutions, US institutions, European institutions, and a swag of Aussie institutions. So I talked about in my opening slides there the exceptional infrastructure, and I showed you some photographs there. But what we have here at Pickle Crow is you can have a short flight, and I hope you can see my pointer here. It's a short flight from Toronto Airport to Thunder Bay. There's daily flights there, and then daily flights from Thunder Bay to Pickle Lake Airport. Pickle Lake Airport, it's a 10-minute drive to that photograph on the left-hand side, which is the core shed. So people can fly into this all year round and get to site in 10 to 15 minutes. We have hydropower on site, sealed roads throughout that I showed you, daily flights, which I mentioned, a 24-man camp, core shed, existing mill. The mill's too small, but it's still there, never been turned on, 600 mil generation capacity, all year round possibility to drill. That's really important. I can't emphasize enough that you should focus on that, because right now, where most people think there's too much snow, it's deep under snow, it's the contrary. That very firm ground aids the drillers. The other thing that you should be aware of this slide is, in fact, that we have amassed 320 square kilometres of landholding. This is the first time in this incredible province, very rich province, that such a large landholding has been held within the one corporate. So as I take you through this and our strategy to exploit this asset, take into consideration it's the first time one corporate has owned such a great piece within this big landholding. I talked about the active mining license to 2067. The beauty of that, of course, is it lessens our environmental exposure with respect to getting approvals. We still need approvals, but they are short-circuited because we always have that active mining license. We're in a great neighbourhood. And here it is, Tier 1 jurisdiction, great neighbours. So to our north, you can see Newmont. You know, the Musselwhite project produced 5.7 million ounces. It's probably up to close to 6 now. This is probably a little bit out of date. You can see directly to our west is the Springpole project, which is First Mining, which are our partners in this particular project. To the west of them again is Red Lake, which is the Evolution mine there at Red Lake, which is a terrific historical producer at 25 million ounces, a classic 20 grams per tonne. But also in the district is the Dixie project. We look forward to seeing Great Bear announce their first resource either later this year or early next. And Goldlum, which is our partner again. There is a smattering of other smaller companies that are looking in the same district just south of us. But you can see with my pointer here that we've had 1.5 million ounces produced to date at a staggering 16 grams per tonne. And add that to our newly discovered 1 million ounces at 11 grams per tonne. It's a spectacular area, and there's more to come. So let me just run you through this. This is where we are. This is the current status of this 1 million ounces at 11 grams plus per tonne in such a fantastic mining district. You'll notice that this 1.5 million plus the 1 million of the inferred resource, that sits on a 3.5 to 4 kilometre northeast trending sub-vertical core mine shear. Exploration is currently focused in this area in the top 500 metres. And I'll show you that in the next slide. But before I do, I want to take you through our three-pronged approach to how we're going about this. So the first thing that we want to do is bring identified zones of mineralisation into JORC resource compliance. That's by adding geological confidence and drill density. For example, vein 22, vein 13, and vein 9, shown in the yellow or the lighter coloured tickers there in those boxes, they were brought into the resource in September. But what you will notice that in our last up here in vein 13, up in the top of the slide here, you'll notice that we added that with our latest results of 18 million at almost 3 grams a tonne and 1.5 metres at 21, 12 and 17. And we hope to continue to add that in the next quarter and quarters after that. The second prong to our approach here is to extend those known resources along strike. For example, vein 5 and 11 down the bottom part of the picture, which extends high-grade resources by a 250 metre strike. And the third prong to that approach that I mentioned in this particular area, which is the current status, us working around this head frame, is new discovery. So we're targeting new areas for future resource growth, which is basically, I've talked about there in vein 11, 1.6 metres at almost 20 grams per tonne, open in all direction. Vein 112 is 3 metres at 7.4 grams per tonne, and again, open in all direction. So this approach is being taken with a focus on continuous resource upgrade. You'll notice this has been our driver from day one. The drill rigs are currently focused on the highlighted areas you can see on this particular slide, as these are the vein orientations and the largest historical contributions to date, which is effectively in this area where you saw almost that 1.5 million ounces mined from. This next slide here I particularly just tells everything about the prolific nature of this particular project. So what we have here is 38 kilometres of lateral underground development. There's existing 2 1,000 metre shafts. They were last dewatered back in the 80s to a level of 700, around 300 metres. So you can see here, if I just use my pointer again, shaft 1, and that very first slide I showed you those shafts, shaft 3 and the Albany shaft. And what you can see is all this underground development flooded to date. You'll note that what our activity is, what our major activity is to focus on that top 500 metres. Why? Well, what we've got here in this slide and what it shows you very clearly is we've got very good vertical continuity here. So high-grade chutes that have good continuous vertical plunge, if you look there, and with over 2.5 million ounces of high-grade gold in the top 1 kilometre. That includes the 1.5 historically produced and the one that we've just produced ourselves or brought into a resource ourselves. And all of this is still very shallow in either Australian or Canadian by their standards. The long-term strategy here will be to build that resource in the top 500 metres, with much of the recent discoveries, i.e. which I mentioned in the previous slide, vein 5, vein 11 and 112, and the resource updates from surface, i.e. vein 22 and 23, which will allow us over time to dewater and drill the next 500 metre depth slice from underground. So again, very familiar. Yes, it is, because it's exactly what we did at Bellevue, but it's to focus on this top 500 metres, get a resource upgrade over the course of the next 6 months, right? Move towards that target of 2 million ounces, dewater down here, and then explore further after this down plunge here. Now you'll notice here that the amount of drill intervals which are greater than 15 grams per tonne, these pink areas. This is a highly prolific area, and there's a whole bunch of lodes that are open to surface, along strike, and down plunge. What's really interesting is this little lode that has been discovered here. This was discovered as they were trying to extend the vein 1 in shaft 1, and they discovered this lode just here. And as you can see, it's obviously open to surface and down plunge. Also, we're looking at these bluer areas here, this target area here, here, and here, to explore those already known drill intercepts that we've had. Very exciting, I think. You can see that outside of the recent resources, we've still got a lot of follow-up work to do from, surface almost. Next slide is the second part. So that's the last 2 slides I showed you is that blue box. That's the focus of the 2 rigs turning at the moment, double shifting. That's where we're focused. That's where we expect to get most of the resource. But we're not going to just leave it there. We're going to unlock that potential we believe is our next discoveries, because we believe that there are brownfield targets very, very close to mine infrastructure. You can see there the Springer shaft, and again, I'll point you to these. This is the Springer shaft here, and you've got intercepts of 1.7 meters at 36 grams. You've got the F vein here, which is 4.6 meters at over 9 grams. The Powder House, which is 6 meters at 7 grams, and it goes on. I'll also draw your attention to the Patricia, Central Patricia, which was mined from 1934 to 1951 at 650,000 ounces. And what has happened here is all of these drill intercepts around here that you see were never followed up. And it's really important to look at the Springer shaft, for example, which produced 13,000 ounces at 24 grams, which is terrific. But look at those intercepts that we've got in there. I mentioned the 1.7 at 36, but almost a meter at 69. They're almost from surface. You could freaking get a shovel and do it yourself. That's how close to surface these are, 15 and 16 meters from surface. It's terrific. And that's not to mention this great trend along here, this MacArthur shear along up the top here, which has got also fantastic grades and prospectivity. So when the 3rd rig comes, which we've been promising for quite some time, when it does come, that's where it will be focused, allowing the 2 rigs in that blue box, and then the 3rd rig will start to unlock that potential in these brownfield areas, very, very close to mine infrastructure. We're talking 250 to 500 meter step outs here. So all of these sorts of targets are outside the resource estimate that I've been talking about, and we've got numerous walk-up targets. So the next part of this gives you a great indication of the scale of our project here. You can see that shaded area down there at the bottom of the picture. That's that blue box in the previous slide. I'll just go back and show you. There's the blue box. There's the brownfields outside there. And now we're doing this regional exploration. So we have started contracting a 4th rig, which would go out to this area when it comes. I don't know when it's going to come, but when it does come, this is what we'll look to try and exploit. We'll really try and get this regional scale going, which is really the future of more resource upgrade. So you're stepping into this regional area, and what I really like is this Tarp Lake target. You've got 36 meters of continuous ore at 1.5 grams per tonne. You've got almost 5 meters at 7 and 5 at 4.46. all in that area there. But that's not to mention that we also have the Metcalf target. Here we're talking about a strike of 14 kilometres. This has never been followed up by any other corporate. So these holes were put down, we believe, by the Central Patricia miners, and they put them down and thought that, listen, given that they were getting 13 grams up to 20 grams plus in this area, along with where the Springer shaft is, which I showed you before, at 24 grams, that it wasn't worth following up, and they'd never followed that up. So we'll be following up the Tarp Lake shear. We'll look at that core mine shear with those drill intercepts that I mentioned before. And we'll also look at the East Pat shear. The drill intercepts there are looking very exciting as well. 35 metres, as I mentioned before, at 2.2 grams from 21 metres and 6 metres from 230 metres. So, in summary, we've got an agreement executed to earn up to 80% of this Pickle Crow project. It's a low risk earning in a very, very exciting gold revival play. We've got an independent JORC resource of 1 million ounces at 11.3 grams per tonne. We expect to maintain that grade or something 10 plus while expanding our resource. Historically, this place produced 1.5 million ounces at 16 grams per tonne before it closed in 66. It did not close because of a lack of mineralisation, I point out. It closed because gold fell to $35 an ounce. It's a great area with a great mining lease with fantastic infrastructure. It's underexplored, large land holding, lots of walk-up targets. We've got a drill campaign now. I'm only less than a third the way through, 13,000 metres on a 45,000 drill campaign. And I've got the third rig tendered. I'm just waiting for it to arrive on site to go and exploit some of those brownfield targets. I mentioned before that I'm very proud of the team that we have, with Marcus leading the team in Canada as we speak now, that everyone's fully invested in this. Everyone's got skin in the game. And we've got near-term on-ground exploration from the rest of this quarter and the next 2 quarters. And that's it from me.
Thank you very much, Ray. Absolutely extraordinary numbers coming out there. We've only got like 2 minutes to ask you a couple of questions, a good and an interesting one. Just about the next resource upgrade, when you think that might be due?
We would expect that, and that we're saying at the end of the first half of next year.
Okay, that's pretty straightforward. Now, you're partway through this 45,000 metre drill program. I've got a question here about some of the delays. What are the main factors that have been affecting the drilling, and how are you addressing that?
There haven't been really any delays. I think what people are referring to is the delay in announcing some drill intercepts. And it's a good question, right? It's a very good question. But the philosophy here with this group is that we want to get geological confidence on this. We just don't want to put out intercepts for intercept's sakes. We don't want to just put out visuals so everyone gets excited. What we want to do is get geological confidence around this ore body so that when we put a resource upgrade out, it's a meaningful number. It should always be about resource, not about intercepts.
Ray, right at the beginning, you showed a picture and you said it's a really good time to drill when the ground is absolutely frozen. Are there any challenges in the location when it comes to drilling and that ongoing drilling program?
Thanks, Kerry. I think it's a good question. It is all year round drilling. Probably the least favourable area, favourable time to drill is just in spring where there's the thaw, and it does get a little bit muggy and boggy. But we managed throughout the spring this particular year. Can't say the same next year, we just won't know. But we were very lucky. So we have had no interruptions with our drilling campaign.
Great team, great area, very interesting, and a lot of news flow to come. Ray Shorrocks, thanks so much for joining us today.
And thanks for having me.